All right, welcome back to my YouTube channel. I am Xavier Smith, and today I'm going to teach you how to become a landlord in the stock market. So this is basically how to buy and then rent out your stocks for an incredible profit. Okay, so first we'll talk about, well, what would this look like if you were a real estate landlord, right? So you'd be buying this house. It's in a nice neighborhood, right? But for some reason, it's just super cheap, right? Not much reason to you. It's just in the future, it's going to be worth more, so you'd buy it anyways at the price it's at. You buy it for 100 grand, right? And then you get these tenants. These tenants, they don't mess up the house or anything, right? They come in, they're great tenants. When they leave, they don't leave anything behind. And they're going to pay you $3,000 every week and a half, right? So I can imagine most people that are watching this video, they would jump on that opportunity like rabid wolves on like a stake, right? You're like, give me that money. That is so much money. Now you can imagine it in less money. Instead of 7 grand, they're giving you like 500. And what this is instead of buying like a property, right, in a nice neighborhood, you're buying a stock that you would have wanted to buy anyways, like Amazon, Walmart, Nike, right? A stock you love and you think is going to be up in the future. You would want to buy it at the price it's at. That's why it's in a nice neighborhood. It's not one of these penny stocks that could be down 50% tomorrow, right? It's one of these stocks you're like, hey, this is a nice stock. I like it. I like the company so much, right? It's at a nice price. I'll buy it now. And what you're saying is, okay, if I buy 100 shares of this stock, I can rent this out for 1 week, 2 weeks, 3 weeks, 4 weeks. The longer I rent it out, right? Again, these tenants aren't going to do any harm to you. The longer I rent it out, the more money they're clearly going to pay me, right? And you can calculate this percent by taking the amount of money they pay you divided by the amount of money you put in, and that's the percent that they're paying you like per week. All right. So we take this money and you say, okay, this stock is low, right? You buy 100 shares of it, and then that 100 shares is now your property, right? That's like your one apartment. So you can rent that out to someone and they will just readily pay you 3% a week. But instead of them like living in your house and they could mess everything up, right? What they're going to do is they're just going to be there. They're going to say, okay, if this stock goes way up, I get some of that gains. So what you're saying is, I have this stock. I bought it at this price. You're saying, okay, at this other price, usually higher, you would go. You'd say, okay, for like 50 cents more, right? If this stock goes up 50 cents by the time like you're living in my stock, like I'm renting it out to you. And if it's above this price, by the time our contract's done, you can have it for the price we agreed on, right? So if you say it's at 74.50 right now, and if it goes to 75, you're like, okay, I'll take my 50 cents profit per share, right? That's that's $50. You take your $50, but then you're going to say they're going to pay you $3 just for that contract. And it's in a week, right? Which is a thing. People do that on some of these stocks like Nike. It's like, it's low. I would buy it right now, but you're going to pay me $3 for this in a week? Why not just do it? So they're going to pay you $3 for this contract. And it's like, okay, if it's above 75, I was going to sell anyways, right? I just wanted some quick profit. But they pay you that $3 as well, meaning you bought at 74.50, but instead of just selling at 75, you're selling at 78, right? So instead of making $50, you're making $350. And if that stock, like your property, goes down in value by the end of the time, the other person, like if it doesn't go up to 75, they lose all the money they put in, right? Because their contract expired worthless. They can't. It's not at 72 and they're buying at 75. That doesn't make sense. It's only if it's above 75 that they can profit. And they can only really profit if it goes up to 78 because they paid you that $3. So you buy this stock and it's already a stock you want to buy, right? You're like, I want to buy it at this price. I would hold this for the rest of my life. It's so good, right? But you can just, if you have this 100 shares, you can rent out your property for a little while and say, okay, if it goes up $1, right, you are going to pay me $3 just for the chance to buy it if it shoots up. So that thing shoots up 20%, you get your like 4 or 5% profit, whatever you agreed on, and they can have the rest, right? That's for them. They're taking on all the risk by saying if it's not above this price, they're just speculating. They're thinking the price going up. But if it's not above this price, they just have to pay you everything. So you're just taking their rent, right, over and over again. If it doesn't hit that price, right, you bought at like 74.50, right? They pay you $3. Then by the end of that week, you like have moved your price down from $74.50 since I gave you $3. Really, your price is $71.50. So if it goes down to $71.50, you're still breaking even just like it's $74.50. So they're just paying you rent. It's like paying off your house. You put 100 grand down and they're paying you 3 grand a week. So really, you put 100 grand, they pay you 3 grand. Now it was only 97 grand. Pay another 3 grand. Now it was only 94 grand, right? Your price is just moving down until eventually it hits $0 and then you just make profit on whatever's left. So if it comes to the best case scenario, you'd sell all these calls, right? You'd like get all your rent and eventually your stock price would be so low that you can only make profit off the stock. And the thing is, you never even sold the stock, right? You're just renting it out. And the key part here is make it a stock that you want to own at the price it's at. And at the very least, if it goes down, right, the money they paid you just like makes up for some of your downside. So that's what it is. You just buy a stock. You're like, I want this stock. I want it forever. And you're saying, okay, I'm going to take some rent from these guys who think they're going to make a ton of money, right? And if they make a ton of money, good for them. You help them out. But really, if it doesn't go to their price or above, you're just making the money and you can make it every week, like 3-4%, which if you put 100 grand in would be like 3 grand, 4 grand a week. And it's absolutely insane. And it works almost every time. Just make sure it's a company you like and you think will be doing good or even better than they are now in the future, because you don't want to be in one of those companies that the second you buy it, it drops 20%, right? Because then you're really losing money on the stock, and that's not good. Because if you're buying a company like that, it's probably not at a price you should have bought at, right? Like if you're buying a stock at a normal price, like it's been sitting at this price for a long time, and it's been like lower in the past 5 years or something, then maybe you shouldn't buy it at the price it's at and sell a call unless you really want to, because you're introducing so much risk. It's like buying, instead of this $100,000 house, you're buying the $300,000 house, but clearly it can go back to 100 grand, right? So you're just waiting for this house to go to 100 grand, then you buy it, and then you take your 3 grand a week, right? And even if it keeps increasing, right? If you keep moving your call up while it increases and they never hit, then it'll be like worth 150 grand, right? Maybe. And then you're still selling that 3 grand call. So if it ever sells, you make that 50 grand plus all the rent you've ever collected. So what you're doing, buying 100 shares of a stock, it's your little property. And then you're saying, okay, here, you person that really wants to get rich quick, right? You're saying, here, I'll give you this little petite house. I love it, right? I bought it so cheap. It's in this nice neighborhood. I want to hold it and live in it forever, right? And you're saying, okay, guy, you can give me some passive income. You can pay me 3 grand a week just because you think it's going to go up in value. And if that neighborhood, like if LeBron James moves in and everybody wants to move in that neighborhood, the house shoots up to 150 grand, well, you were happy with your like little returns, right? But over time, those little returns build up, and 3% a week, that is crazy if you compound it on each other. Like you'd have 100 grand, then 103 grand, then you do like 100. Oh shoot, I'm not good at that. Yeah, whatever. You get another 3% on that $300, and you're crazy. So you become the landlord of the stock market by just buying a stock you want at a price that you want to own it, and then these people are just paying you rent because they think this is going to go up in value. And if it does, it doesn't matter to you. You win either way. You get money off their rent. You get money if it goes up. If it goes down, they don't get like all their stuff goes like burns, and you just get all the money they had, and that like takes on some of the loss. Sometimes even if the stock goes down, eventually when you sell enough of these, you're not losing money when the stock goes down. You're breaking even or making money still. So as the stock goes down, you can keep selling these calls and they can keep making you money. And if you're like, well, I'm scared this company is going to go down or this house value is going to go down, you can buy the house at 100 grand, right? And if you think it's going to go down to 90 grand within the next week, you can sell one of those calls for 85 grand. It's going to make you less money overall, but it's going to bridge the gap, meaning that they're going to pay you like 99 grand 800, right? 99,800. So you'd lose money if it didn't execute. But if it goes all the way down below 85, then you just made all that big chunk of change that they paid you, that like 14 grand they paid you, you made all of that, and that just brings your price down. So if you're scared about something going way down, you can sell one of these calls, like you can sell your rent for someone buying it at a lower price than it already is. right? And if it goes below that price, well, their contract doesn't execute, they can't buy it, and they paid you more money when it's lower than they did when it's higher. Because when it's lower, they have to make up the difference to the stock that, like, to the price it's at right now. And then usually when those are like one click down, they have to pay you some extra profit. So that's something, if you're scared it's going to go down. If you just want some money, you want passive income, you're going to make like 3% a week, you can find stocks like right now. I know Nike is popping and I am jumping into that. So if you want to become a landlord of the stock market, just like I am, and you want to get these crazy returns every year, like your 100 grand investment could go to 260 grand if you're making 2% a week, right? Compounded. Then if you want to be just like me, please like and subscribe. It helps me so very much. It keeps making me want to make these videos, and I always want to help you guys. So leave something in the comments, say hi, say thanks for the video, say I love you, or just say, huh, that's an interesting strategy. All right, well, I hope to see you next time. Bye.